Hey everyone, welcome back to the channel in a new educational video. Today we're going to be talking about good versus bad tops and bottoms in trading. So what are we referring with this? We're going to talk about swing points and how once we identify a double or triple top or bottom, when we have a liquidity raid or a false breakout or breakdown and a reversal, that is going to give us a much higher conviction when it comes to identifying a reversal. Okay, so let's go to the charts and to the diagram of what we're going to be talking about. So this is in essence a bottom example, and this is what we will be looking for. So again, if the market is coming down, when we see that a market makes, like, let's say 2 lows, but they're almost exactly the same, like a double bottom, or even slightly, a little higher on the right shoulder than the left, then this won't be as high conviction, because there is a larger chance that at some point soon the market could come and just probe all the liquidity that is resting before this, before actually reversing. Whereas if you have an example like on the right side, where we have a low and then we have market just going through and then immediately coming and closing back up, this is going to give us a much higher conviction that the liquidity has been tapped underneath this very obvious lows right here, and then this is gonna be a higher conviction for a reversal. Okay, and we're gonna go over a few examples on the charts just to see what we're talking about, and this exact same thing would apply to a top as well. You just got to turn this around. So if we have a top like this, it's going to be a lot less conviction than we have a top like this, where we have a raid or a tapping of the liquidity that is resting up there. Now, we want to quickly compare this when it comes to order flow trading. For those of you or people that trade market profile, there is one of the elements of market profile that most traders look for is what we call poor highs and lows. So remember, in this case, market profiles are 30-minute intervals, and as you can see on this purple line, this is identified as a poor high, which is this double top that we made right here. What does this mean? It means that in this daily session, or this day from here to here, this is the SP 500 futures. So from here to the end of the day here, we had 2 30-minute periods. So we had one right here and the other right here, where price reached up to the exact same price of 53.1325 before reversing. So this leaves us a poor high, because normally we want to see an excess. We want to see price flushing down and then having a good reaction, such as this wicks that we have here near the bottoms. Because if we leave double tops or bottoms, or just general action right at the same level, then there's going to be a lot of accumulation of resting orders right there. Because remember, if in this case a lot of traders, let's say, go short here, they'll mostly put their stops right here. So once the market comes and probes through those levels, like what happened here, then that means that this orders to sell have attached. Remember, for every buy there's a sell, every sell there's a buy, and if you go short, that means your stop loss is going to be a buy order, and usually they're going to be market buy orders. So that means when price comes and probes through this and starts hitting these levels beyond this, where there's mostly going to be stops over here, then those stop losses that are executing are going to execute as market buy orders. Added into that we have, in this case, breakout traders, etc. And then that is just going to add fuel to the fire in order to then possibly continue on this breakout. And this is how this poor highs, we say that they've been repaired because they've been retested again here. Okay, that's just sort of a side note on market profile. But when we see it on the charts, if we see, for example, a low like this, you can see this move right here. This was a fundamental driven news, probably 2 p.m. Eastern, so most likely it was an FOMC or a Federal Reserve announcement. This is a 1 hour E-mini SP500 chart, but you can see right here, you have this low and we have this wick that just barely taps through those lows and reverses, and then this gave way to a very nice reversal. If we go here in the NQ market, we have several examples right over here. And again, we're talking about specifically the time frames that you are trading. So if I'm day trading, I pay a lot of attention to the 1 hour chart as my more high time frame chart. And so you can see, like right here, we had this big move up. We made this swing high. We came up, made a huge probe on this level, closed back down. So that means all the liquidity over here was tapped. Plus also, when we have this candle left over here, there's a lot of aggressive trap buyers, breakout traders in this case, that got caught on the wrong side because they started market buying and going long right here, only to reverse. And then when this starts going back, what we talked about before, but in reverse. In this case, breakout traders are trapped. So now they are long and their stops are right under here, or they're going to have to bail and close the longs by market selling their positions, and that's going to add fuel into the reversal. In this case, we have another example here, a low. We do a probe and close back above, and then that leaves us with a very nice reversal. Here the same thing, a high, a quick probe, close below, and then that goes. The nice thing with this is that also when we identify this, and let's say we get long around here or whatever, we know exactly where to place our stop losses. We want to place our stop losses right beyond the probe on liquidity and the close back inside. If we go here, Euro US dollar, this is a 5-minute chart, and we have another example here on the lower time frames. You can see how we had this big area of resistance. This is during the Asia session, and then right here during Europe and during New York, on both sessions we probed the highs from Asia and closed back below on both of them, and you can see we got some very nice reactions off of both of these levels right here. Now obviously we're not always going to see this happen. Like for example here, same Euro US dollar 5-minute chart, you can see this is right around the New York open. We had this low that was made around 6:30 a.m. Eastern. We had the New York open markets right around here, and then we came here and we did not probe this low. So you can see still we had a very nice reversal, but this was not, you know, marked off as a high conviction low, because ideally we would like to see a probe and a close back above just to see this as a very good bottom signal in this. Okay, so that's pretty much it for the video. Again, just a quick concept of how we can identify good potential reversal areas near tops and bottoms by looking at liquidity probes for good double bottoms, triple bottoms, or triple tops or double tops. Okay, thank you everyone for tuning in. Hope you're having a great weekend, and I will see you all in the next video. Take care.